Welcome to our daily market breakdown. Today, we're zeroing in on two major economic updates that could shape global markets: the US Philly Fed manufacturing survey and the latest UK labor data. Both are closely watched by investors and policymakers, as they provide fresh insights into economic momentum and potential policy shifts. We'll start by unpacking what's expected from the US manufacturing sector, then turn to the UK's evolving labor landscape. By the end, you'll have a clear sense of how these numbers might influence stocks, currencies, and central bank decisions. Let's dive in and see what's moving the markets today. First up is the US Philly Fed Manufacturing Survey, a key indicator of industrial health in the Philadelphia region. This survey often acts as a bellwether for broader manufacturing trends across the country. Recently, the index has dipped into negative territory, signaling contraction. However, expectations are building for a rebound this month. If the survey prints above zero, it would suggest a return to growth, potentially bullish news for industrial stocks and the broader market. Investors will be watching closely for signs of recovery, as manufacturing is a vital engine for the US economy. Philly Fed Manufacturing Survey doesn't just reflect local conditions, it often sets the tone for national manufacturing sentiment. A positive reading above zero can boost confidence in the industrial sector, encouraging investment and hearing. On the flip side, continued weakness could raise concerns about a broader slowdown. For traders and analysts, this survey is a leading indicator, helping to anticipate shifts in economic momentum before they show up in other data. That's why today's release is drawing so much attention from market participants. The Philly Fed index rebounds above zero, we could see a rally in industrial stocks and related sectors. This would signal renewed optimism about economic growth, possibly lifting the broader market as well. Conversely, another negative reading might weigh on sentiment, especially for companies tied to manufacturing and exports. Bond yields and the US dollar could also react, as investors recalibrate their expectations for Federal Reserve policy. In short, this survey has the power to move multiple asset classes in a single morning. Now let's turn our attention across the Atlantic to the United Kingdom. The latest labor market data is in focus, especially as the UK economy navigates a period of uncertainty. Recent purchasing managers, index PMI readings have hinted at a softening jobs market, with slower hiring and more cautious business sentiment. Investors are keen to see if official labor data confirms these trends, as employment figures are a crucial gauge of economic resilience and consumer spending power. One of the most closely watched aspects of the UK labor report is wage growth. After a period of rapid increases, there are signs that wage gains are cooling off. This matters for several reasons. Slower wage growth can ease inflationary pressures, making it less urgent for the Bank of England to raise interest rates. On the other hand, if wages remain strong, the central bank might delay any rate cuts. Today's data will help clarify the path forward for both workers and policymakers. Bank of England's next moves are under the microscope. If today's labor data shows clear signs of a cooling jobs market and slower wage growth, it could strengthen the case for rate cuts in the coming months. However, any surprises, like unexpectedly strong employment or pay figures, might keep the central bank on hold. Traders will be parsing every detail, as interest rate expectations have a direct impact on the British pound, bond yields, and equity market. It's interesting to compare the US and UK situations. While the US is hopping for a manufacturing rebound, the UK is watching for signs of labor market cooling. Both data releases have the potential to shift market sentiment and influence central bank decisions. Investors with global portfolios will be watching both closely, looking for opportunities and risks as the numbers come in. The interplay between these economies often sets the tone for broader market trends. Sum up, today's US Philly Fed manufacturing survey and UK labor data are both pivotal for markets. A positive surprise from the US could boost industrials and lift overall sentiment, while signs of cooling in the UK labor market might nudge the Bank of England closer to rate cuts. As always, the devil is in the details, and market reactions can be swift. Stay tuned for the latest updates as these numbers are released and interpreted by traders and analysts worldwide.